please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, some key earnings to watch out for today from the Auto Pack. Bajaj Auto and Ashok Leyland, both of them will be reporting their fourth quarter numbers. Sonia Shenoy standing by with key expectations. Sonia, let's start with Bajaj Auto first.
It is a good showing for Bajaj Auto, led primarily by the three-wheeler sector. Remember, there's not only a low base effect which is playing out, but the three-wheeler market has improved both in exports as well as in the domestic market because of issuing of more permits by various states. Now, the revenues are expected to go up by almost 34%. Overall volumes have gone up by 33%. Three-wheelers, as I said, have risen by 144% in the domestic market and 83% in the export market. But not just that, we've also had the domestic two-wheeler market which has grown well, almost a 34% jump over there. Now it's also base effect because of which the numbers will look good. Same time last year the company was hit by demonetization. Not just that, the margins year on year will look very strong because in Q4 of FY17 the margins were hit by the BS4 transition. So year on year numbers will look good, but otherwise also the trend is positive for Bajaj Auto.
Okay, Sonia, so the trend is positive for Bajaj Auto, but what about Ashok Leyland? It also comes out with numbers today.
It has been a stellar quarter for commercial vehicle makers, and this time around we're expecting Ashok Leyland to post very good numbers. Now, a revenue growth of 34% is what we're forecasting. That's because they had record high volume growth in Q4. Remember, this time there was an overloading ban on a lot of states, because of which the demand has gone up, and the demand for high tonnage vehicles has gone up, because of which realizations are also expected to go up. So we're expecting margins to improve more than 100 basis points year on year, and the profits to go up by about 54%. Now, the commercial vehicle volumes for the company have gone up on an overall basis by 23%. Medium and heavy commercial vehicle volumes have gone up by 15%, and LCV, light commercial vehicle volumes, have gone up by 59%. So we're expecting a strong quarter for Ashok Leyland.
Let's talk about a couple of earnings then. Thermax is a stock on our radar. Anisha, update us.
Well, Manglam, actually of late the company has been disappointing when it comes to the numbers, because remember the outlook for the company was not that strong, but this quarter the street is expecting a lot from the company to come by. So if you look at the analyst expectations, they're looking at a top line growth of around 26%. The operating profit is expected to jump up around 32%. Margin, now that one is expected to stay close to the 12% mark, because remember the management after the end of Q3 also guided for a 10% margin band for FY18 itself. Now if you look at the hours for Q4, it is around 12%, and hence the analysts are pegging in that number. The profit is expected to come in 140 crores versus a loss of around 17 crore that they reported last year. Now to my eyes the numbers look a bit more aggressive. Maybe the analysts are pegging in a lot more, but that is what the average of the analyst expectations really indicate. Now in terms of the segments of the company, we're expecting improvement to come by as far as the energy segment is concerned, and that's the reason we are seeing a 30% uptick when it comes to the energy segment revenue of the company. Environment segment, which caters to the the power generation business of the company, is really which is looking weak. We are waiting by to hear any management commentary that suggests that the bottom is already behind us, and maybe we'll see an uptick as far as the environment ordering is concerned. The order intake will rise this quarter. Remember, they had taken in a big order for around 500 crores, and that's the reason we might see a 50% jump when it comes to the order inflows, but that is something that the street has already factored in. In terms of the key issues to watch out for, remember the management had guided us that the order inflow for the entire year will be up around 24-25%. We'll see whether that happened or not. And other than that, they also said that they'll see only marginal improvement in top line. So as I mentioned, maybe the street expectations are on the higher side, but let's see how the company fares.
All right, so higher expectations. Let's see how the company fares. What about Voltas?
It was rather uninteresting quarter from Voltas this time around. Really did not perform well as far as the UCP segment is concerned, because remember they have lost market share as well. So by the end of quarter 3, their market share in room AC business was around 23.7%. Now they announced at the end of quarter 4, the market share was around 22%. So clearly they have lost market share when it comes to the UCP business as well. Now in terms of the MEP business of the company, which is a mechanical electromechanical project of the company, they have performed better. The revenue came in line with expectations, and the margins there have expanded. Now talking about the key numbers for the company itself, the revenue came at around 2,050 crores versus the expectation of 2,300 odd crores. The margin, however, came a tad bit better at 12%, and that is because the MEP segment really performed well. The net profit below our estimates at 195 crores versus a poll of around 216 crores. Now as I was telling you, the management commentary regarding quarter one was also not very strong. They were talking about how unseasonal rains have really dampened the industry sentiments when it comes to the April as well as May sales for AC. What brokerages make of it? CLSA says that thesis of the peaked market share is what is starting to play out, and they see it as a de-rating catalyst. However, they maintain a buy call on that particular stock. Jefferies on the other side says the weakness is a buying opportunity because they're expecting the earnings growth to come by in the coming quarters. So clearly, the outlook is what the most important thing is. In fact, on that note, let's listen to what the management had to say regarding the outlook for the company.
We remain reasonably confident about the longer-term future, not forgetting that the nature of our industry is substantially dependent on the weather. In the immediate term, unseasonal showers across some parts of the country in the peak summer months of April and May have dampened the industry spirits. However, it is too early to predict the impact of this on the entire year's sales. In the project space, we will focus on building a larger order book, albeit continuing our practice of intensive risk assessment. Needless to state, the strength of our balance sheet and the availability of cash surplus and a ROC exceeding 20% remains an advantage as we look at opportunities.
Focus on to some pharma sector news then. Biocon, Fortis as well as Sun Pharma will be on our radar. Let's begin with Biocon first. The US FDA has actually issued Form 483 with 7 observations to Biocon's Bengaluru unit. And Ekta joins us now to run us through the details. Ekta, good morning. Are these observations very brutal in nature?
Well, you can't say they're brutal in nature. That's because Sun Pharma has already clarified, Biocon has clarified and said that these observations are procedural in nature. So hence it was expected that the details of these observations would come out. Now, however, it has to be seen how exactly the company would respond to these particular observations and what exactly would the remediation be and whether that would be satisfactory for the US FDA. Based on Biocon's past track record, possibly, the things have will probably go well. Now, important to note that this particular inspection is a pre-approval inspection for their biosimilar pegfilgrastim, where there is a target action date by the US FDA on the 4th of June. So this particular inspection and observations come ahead of that, and hence a possible delay in this TAD or maybe some amount of difficulty would probably keep the street a little nervous ahead of this particular June 4th date. Separately, we have Sun Pharma and Focus because Taro has come out with numbers. Taro is their US arm, where the net sales have fallen around to 11% on a year-on-year basis. So that's quite positive because if you compare it, there was an estimate that it could fall around 20% year-on-year. Margins have come in at around 42.7%. So that's declined as compared to 52% year-on-year. And the profit has risen around 4% because the tax rate is much lower on a year-on-year basis. So overall, generic pricing pressure continues, but it's at a lesser extent. Also want to add that Sun Pharma is going to be launching the authorized generic version of Welchol, which is a cholesterol drug in the US. It's around a $500 million market size, and Sun Pharma is likely to make around $10 million from this particular drug. Fortis is also in focus on account of IHH, submitting a fresh letter to the exchanges saying that they are extending their previous offer to the 29th of May. This is on the back of Manipal's enhanced offer. What the Fortis board now does and how they take these offers into cognizance after closing and choosing the Munjal Berman deal will be something that the street will watch very closely.
Absolutely, Ekta. You're talking about so many pharmaceutical stocks. I had to sneeze in the middle of your chat. But let's take a look at the cues coming in from the futures and options space. Rather fallow cues coming in from the futures and options space, because if you take a look at what the FIs did in index futures, sold about 30 crores in index futures. Remember, yesterday the Nifty futures premium fell from about 20 points to 13 points, telling you, yes, there was some selling in index futures. However, the FIs are still 58% long in index futures, so further downside may lead to more long unwinding. So that's that is something we have to keep an eye out on. Index options, there was a lot of volume spurt in index options, and understandably so, primarily because yesterday was Thursday, Nifty Bank weekly options expiry. So instead of looking at the absolute number and the FII action in index options, let's take a look at a couple of strikes. So yesterday what had happened, or over the last few days what is happening, is a lot of the puts that were written have come in for unwinding, and a lot of calls have been written. In that, so the Nifty put call ratio has come off from series high of 1.66 to close to around 1.46. The puts that were written and got unwound were at 10,800 as well as 10,700. The Nifty fell below the 10,700 mark yesterday, so the 10,700 call saw some writing along with the 10,800 call. So maybe the bears are looking at protecting these marks on the upside. That is something we have to watch out for. In terms of individual stocks, definitely keep an eye out on Reliance Communications. After that sharp rally yesterday, the stock has come out of the F&O band, so it will be interesting to watch out for Reliance Communications. Other than that, we saw some fresh longs being added on both the Bajaj twins, Bajaj Finance and Bajaj Finserv.
Okay.